Okay, welcome to this week's edition of Macro Minutes. This was from the 25th of June, although today is the 28th. Due to COVID lockdown restrictions in Sydney, we've had a small delay on this. Apologies. I'm your head of trading, Mark Gardner. We'll start with the disclosure statement as per usual. The information summarised in this webinar does not constitute financial or professional advice. It's general in nature and doesn't take into account your specific circumstances, should not be acted upon without full understanding of your current situation and future objectives and financial goals. Okay, stocks in our universe this week. We have Challenger, we have Costa Group, and we've got CBA, all the C's. Rightio, so Challenger released an investor presentation on the 17th, reaffirming their 21 profit guidance to be at the bottom end of the guidance range, around about 390 to 440 mil. They expect the financial 22 net profit before tax to be approximately 450 million, which is broadly in line with analyst estimates. CGF widened its capital target range to 1.3 to 1.7 times, with the upper band revised from 1.6. This will result in a 2% lower return on equity compared to the RBA cash rate, plus 12%. However, the previous ROE target of RBA cash rate was 14%. And it was not achieved in financial year 20. Thus, the reduced target return on equity might be closer to the actual ROE in 21. CGF closed down 1% on that day. They did have a rough couple of days after that, but overall, they're starting to show like they're forming a little bit of a base from the trading department's perspective at this point in time. We've sort of been looking at Challenger showing any form of life, we might start to be interested in buying those there. Bit of an unfortunate, obviously, bit of an unfortunate revised numbers there, but I think that annuities sort of product is going to go fairly well in the in a raising rates environment over the next couple of years. It just might take a little bit of time there. So next up, we've got CBA on the 21st. They announced the sale of their ComInsure general insurance business to Hollard Group, establishing a 15-year partnership in the process. This concerns home and motor vehicle insurance products. The transaction is expected to be complete by mid-calendar year next year. Transaction costs will include an upfront consideration of 625 million and deferred payments to be paid as milestones are hit. Furthermore, additional investment from Hollard Group to be expected across the time span of the partnership. CBA will also earn income on the ongoing distribution of home and motor vehicle insurance. Upon completion, CBA's CET1 ratio is expected to lift by 9 basis points on a pro forma basis, with 400 million approximately to be added to CET1 capital. They closed down 5.5% on the day. However, that day, realistically, the financials were down about 3%, 2 to 3%, due to that was the day when the FOMC's rate hike schedule was perceived by the market to be moved up, so the financials and commodities got hit that day anyway. So you'd probably only expect that to be maybe 2% downside for those guys, or thereabouts. So it wasn't hugely impacting. CBA was also at very elevated prices around that 106, 105 area at that stage. So it's just tucked in behind $100 again. So still, very, very high for those big four banks here at the moment. Next up, we got CGC on the 23rd. They went into a trading hold and they announced a capital raise of 191 million. Funds will be used towards the acquisition of citrus producer 2PH Farms. There's both an institutional and retail component to this entitlement offer, followed by shortfall book builds for both. 63 million new shares are going to be issued at a price of $3, which is a 10% discount to TREP of $3.35. It's expected to be 10% EPS accretive, and with future enhancements as 2PH Orchard matures and crop yields double by 2025. Dates for the raise are as follows: institutionals around the 23rd, which has been. Shortfall to be completed by the 25th. Costa will recommence trading on today, the 28th. Haven't seen that this morning. Usually they sort of do reopen around 11ish. Retail component will happen in July, opening on the 2nd of July, and they'll close on the 19th. Shortfall for retail will be on the 22nd. They also reported forecast figures for the following. Revenue to be 627 mil, statutory EBITDA and NPAT to be 124 and 4 respectively. This is broadly in line with the analyst estimates. Rightio, stocks to watch out for over this week. Now, Metcash will be announcing its full year net results financial year on today, the 28th of June. It's a wholesale distributor which operates food, liquor and hardware segments. It sells products under the IGA, Mitre 10 and Timber Home and Hardware, Bottle-O brands. Company is expected to report strong revenues off the back of pent-up repair and remodelling activity. Goldman's expects an 8.2% increase in top-line revenue versus the previous period, driven by strength in hardware and liquor sales. So absolute sweet spot there for COVID, hardware and liquor. Now offset by convenience sales following the loss of contracts. On the bottom line, an underlying profit after net tax of 281 is expected, which represents a 34% increase versus the previous period. And next up, we've got we've got Collins Food Group. They'll be announcing their full year results on the 29th. They've mainly KFC, Taco Bell, Sizzler restaurants across Australia, Netherlands, Germany, China, Japan and Thailand. I don't know whether there's how many Sizzler restaurants there are anymore, but anyway, haven't seen one of those for a while. But the company is expected to report 581 in revenue. Strong result after the ABS revealed food retailing increased 1.5% in April. While share price is elevated, the business continues to be driven by tailwinds, including a recovery in Europe and rising market share via drive-thrus and continued store rollouts. Next up, we've got Barton Gold, IPO set for tomorrow. There's another IPO today, I think Camplify, and I mean there's been a few, but there's an absolute glut of mining stock IPOs at the moment. They had an oversubscribed IPO which closed early and gave the company a $15 million war chest. The company will issue 60 million new shares at 25 cents a piece. After the listing, Barton will have a title issue capital structure of around about 175 million shares for a notional market cap of 44 million. So quite a small one. However, you know, those small ones can go on little runs from the open, so probably something to have a look out for. The gold miner has combined gold resource position in the rejuvenated Gawler Craton of 28.74 million tonnes at an average grade of 1.2 grams per tonne. It also owns the Tarcoola project. The cap raise is expected to be used to carry out exploration and enhance its geological understanding of the Gawler Craton mine, Carton mine, with management considers has potential for material extensions. Rightio, looking ahead to next week, we've got a whole heap of US unemployment data and some manufacturing PMIs. Wednesday, we got the China May manufacturing PMI. The release will be of particular interest, obviously, with China being the biggest manufacturing country. It'll give commodity traders further insights into whether China is simply bluffing commodity prices down or whether their threats are genuine. At the moment, it seems more like they're bluffing. And considering particularly the steel inputs, they're producing at absolute record rates at the moment. So look, you know, China loves to beat its chest, but unfortunately, the same way they control their internal population doesn't really work in the global economy, and hopefully they'll learn that one day and just stop mucking markets around. But until then, we'll have to deal with these fluctuations, and I guess I suppose it provides some decent opportunities here and there. Next Wednesday as well, this Wednesday, ADP non-farm employment change. The data's released 2 days ahead of the official data. Some non-farm payrolls on Friday. They tend to have a larger impact, the non-farm payrolls. They have been fairly volatile of late, the non-farm payrolls numbers. So it'll be interesting to see how they go there. Just coming off the back of the Fed stuff in the previous weeks, they're probably going to watch these pretty closely. We don't have anything from the FOMC until late July. So I think around about the 27th, 28th is the Jackson Hole conference. So look, that's really going to be where we're going to want to watch. There's, you know, watch the most. I think that's probably for the next couple of months. Those are going to be the absolute key changes to see if the Fed is actually going to move their rate hike schedule up in the timeline a little bit. We do have a couple of members now shifting them up. The dot plots. It's if you want to Google dot plot FOMC, you can see the graphics there. They're just showing that basically if members one by one moving their timelines up a little bit, which will dampen inflation. But realistically, what they're saying is the Fed's saying that they're willing to live with inflation and see average inflation as opposed to moving rates on predicted inflation, which is a bit of a shift in the way they do things from the past. If they do go back to watching predicted inflation, that's not going to be great for commodities and financial stocks. I wouldn't have thought in the initial part, and things like gold. However, if they're willing to live with inflation and see average inflation before they start moving rates, we're probably going to see a continuation of that sort of super cycle style movement, where commodities and financials and value stocks are going to start really kicking along, and you'll see those growth stocks pull back because of those inflated PEs or those high PE ratios. Those stocks won't perform quite as well. So we got ISM manufacturing data as well Friday this week. It's one of the leading indicators of overall economic health. Purchasing managers are pretty quick to meet the demand of consumers. We did have we had the Aussie and some other US manufacturing PMI, UK and Europe PMIs, and I think Japan as well last week. They were all pretty strong, so I would expect this one to be roughly the same. Thanks for attending the Macro Minutes. If you're in Sydney, stay safe, and if you're outside of Sydney, stay away from people from Sydney, I suppose. We'll be business as usual here at Maqro. We're all working at home on video conferences and things, so don't hesitate to call up. Everything's been set up in really quick turnaround, so which is a big thank you to our IT department, etc. So for all the customers out there, don't fret. We're on top of everything, and it is absolutely business as usual. Just we just don't have as much travel time to work, I suppose. Thanks for attending the minutes, and we'll chat again next week.